Welcome back to the Beginner Trader series. This time I want to talk about candlesticks. When you've been trading, you may have seen candlesticks like this on the chart. Candles like this with wicks coming out the top and bottom. I want to explain what these mean when you see these in the stock market, and then go on to look at what they mean in a real world scenario. Because it's all well and good describing them, but I want to then show you guys a chart and ultimately explain what everything means. So yeah, you see candlesticks like this a lot in the stock market, but without any training, it may not mean much to you. But the thing is, candlesticks can tell us a lot about a stock. We use candlesticks when we're carrying out technical analysis. Not everybody trades with technical analysis, but something which many people do, and if it's something which you are interested in, you may want to listen up, as this will help you in your trading journey. So let's go on to draw another candlestick so I can show you guys everything and how it all works. So what we see with the candlesticks is we see a body of the candle like this, and that's going to be the majority of the candle usually, but sometimes we see candlesticks like this, which are very small. And then we often see a medium-sized wick coming out here, and a medium-sized wick coming out here. And again, these top parts are called the wick of the candle, because it is just like a candle. Alternatively though, sometimes we see candlesticks like this with a big wick coming out the bottom, and sometimes we see the opposite, candlesticks like this with a big wick coming out the top. So what does this all mean? Well, the thing is, candlesticks tell us about buying pressure and price action. So we're going to put BP for buying pressure and PA for price action, and then I'll explain what I mean by that. So we'll start off by explaining the very basic candlestick, which is a type like this. They all can appear on charts though. So what we see here is a candlestick with a body. Now this body can be either red or green, and that depends on whether the stock has moved up or down in that particular time period. But what we have as well on top of that is we have a wick on the high side and a wick on the low side. Now what these two wicks, these two lines coming out of the candle like that mean is this is the high that the stock has hit within that time period, and this is the low that the stock has hit within that time period. So ultimately, this is the highest point that we've seen in that minute, in that hour, or in that day, and this is the lowest point. But if you see a candlestick which is ending more towards the bottom, it shows that that particular time period has been negative, and we've seen more selling pressure. So again, the buying pressure is reduced and we're seeing more selling pressure. But again, when we see the opposite of that and the candlestick is looking up like this, then we are seeing more buying pressure. So you see the point here. These two wicks simply just prove and show to us what the high and low of that time period has been. So when we look at applying this in the real world, we see that we can actually read a lot from this. Let's move over to a stock chart and explain this further. So what I've got for you guys here is the SPY, the S&P 500, and each one of these candlesticks indicates a minute. Now the thing about candlestick charts is they are not dissimilar to other charts that you've seen. You may be used to seeing a line chart like this. These are fairly common. And the candlestick chart is the exact same thing. All it is it gives us a little bit more information. So what we see here when we zoom out, we'll actually zoom out to the 1-day chart to make it even easier. So we see each one of these candlesticks tells us a lot about how this asset has moved in said time period. So we see ultimately we've had some strong candles, which shows that this has been moving upwards. Now we don't see much of a wick up at the top, which shows that we haven't moved down very much, because we don't see a wick at the bottom and we don't see a wick at the top, so we are likely looking up. Now when we look at some other candlesticks to read something out of here, you see some very interesting patterns, and these all tell us a lot about the minute. So again, when a stock drops, we see that this is a low that it's hit, and we see that it's gone on to rise up a little bit, so we see the stock kind of coming back a little bit as the body of the candle is closer to the top, and this kind of indicates more buying pressure, as we would anticipate this to potentially see a bit of a bounce, but that is obviously not guaranteed. Again, when we're looking at charts like this, traders would use a lot of different indicators to make their minds up, but this is just a simple candlesticks. So what we're seeing here on the candlestick chart is a pattern that allows us to kind of extrapolate that data and then go on to make a more educated opinion. A candlestick chart is just one part of a good trading strategy, but ultimately the candles are very easy to understand when you wrap your head around it. When we see a green candle, it means that this is moving up. When we see a red candle, it means that it's moving down. It means that we've had negative movement in that time period. So again, red candles in this instance equals 1 day in the red. Green candles, 1 day in the green. So that shows us how we've been moving. Again, the body of the candle, to break it down a little bit more, high towards the top usually indicates more buying pressure. Lower towards the bottom usually indicates more selling pressure. So it's very easy to understand when you wrap it up like this. Now if you guys want a more detailed video on this, I can of course make it, but hopefully that explains everything for you. Again, trading with candles is fairly easy. It's not that hard to wrap your head around. It's one of those concepts which people see a chart like this and they think, oh my goodness, that's so overcomplicated. But when you zoom in a bit and make sense of it, it's very, very easy. It's just one way that traders look to gauge the next movements of a stock. But again, it's only one part of a very complex strategy. If you want to see us talk about more parts of that strategy though, do make sure to subscribe, as there's going to be a full series on different elements of trading coming up. So thank you, I'll see you in the next episode of that.